Chetan's presentation sets the tone for the discussions we're going to have today. I guess Chetan made a statement that I'm going to be repeating here. AI is here to stay, and the new ways of doing things is what we're going to talk about today. Especially given that the future of banking is now embedded in AI. It's not a bubble, to borrow your phrase. So we aren't going to see we are seeing the change that we are already experiencing. So that brings me to the next discussion, or the first discussion of the day, which is panel number 1. We're going to have a discussion on future of banking, which is a business leader's perspective. I actually have the honor of inviting some very interesting people in the room to actually join me today as my fellow speakers on this panel. Please put your hand together to welcome the Director of Business Development at Bahrain FinTech Bay, Mr. Tariq Mattar. Tariq. It's wonderful to have someone from Bahrain FinTech Bay pioneering the FinTech space in the country. My next speaker is the Head of Corporate Banking and Commercial Banking at Standard Chartered Bank. Love to welcome Ashish Kumar. Ashish. I happened to be talking to Ashish just before the summit, and he was very proudly stating that, look, Standard Chartered Bank at one point of time was actually playing the role of a central bank. And it was fascinating to know how old this bank has been in this country. And in fact, anecdotally, he was saying, even the first air conditioning was actually in the bank in this country. So, lovely to have someone representing the bank that has actually been in this country for such a long time. But it's also important to have someone who's actually the new, but not necessarily young kid anymore. Someone who's actually representing the new age digital avatar of banking in Bahrain. Please put your hands together to welcome the Chief Operating Officer at ELA Bank, Cian Bracken. Yeah. Amit could not join us today, but I do have someone from, we have the banking community, we have the digital banking community, we have the FinTech community. Shouldn't we have someone from the supplier community, the technology community? So I would love to welcome Saqib, Director at I2C. Thank you. Well, lovely to be here again. And as was mentioning earlier, this panel sets the tone for not just for the summit today, but I guess for a lot of things happening in the country. Talking about future of banking. So I want to start this, the panel with a question to you here. So if I was to look at, the one topic that we all concur in the room today is that digital banking is transforming the banking landscape. I mean, that's like a cliche now, it's an understatement, that's a given. But what is more important, and what I think would be lovely to hear from you, is What does this mean in terms of the new ways of acquiring customers, retaining customers, given that we're dealing with a different generation? But most importantly, what does it mean to actually earn the customer's trust? End of the day, banking is all about, being the custodian of that trust. So what does it mean, in the digital banking age, in your view, on customer trust, acquisition, retention, and what are the rates you wanted to say?
Absolutely. Look, I think you've touched upon some very important topics. First of all, thank you very much for hosting me today. It's a pleasure to be here. Pleasure to catch up with many of you on the floor that I haven't seen in a while as well, so great to see you all. Look, as Cian kindly pitched at the start of this presentation, we've seen Bahrain has been a huge adopter of digital channels when it comes to banking. With that comes a huge amount of opportunity, but also some challenges as well. If we start with trust, which to me is the most important factor in all of this, we're only as strong as our weakest link when it comes to a digital channel. I'm happy to say, for me personally, I very rarely handle cash. I very rarely even bring debit cards or credit cards. I'm fully at the mercy of my mobile app. And in Illa, that's our main digital channel. What does that mean? If a customer has a negative experience on that app, the trust can be broken immediately. In this ecosystem, it means we have to invest extremely heavily in our DRs, in our backup systems, and others, to make sure that's as smooth as possible for our customers. The days 5-10 years ago of having a DR or redundancy setup that isn't active and can take you up to 2 hours to come online are gone. We would lose the trust of our customers. It would be removed immediately. Transparency with our customers is also key. If you imagine, as a digital bank, every few weeks with the kind support of our central bank, we have an opportunity to do maintenance. Again, a customer like myself, I have no backup if my phone isn't working to get cash, to spend money, to transfer money. So I need to be fully aware if there's a planned maintenance, or even more importantly, if there's an unplanned maintenance. And when we go back to trust, we have to be extremely transparent with our customer base. You see it for those of you that use Illa on our social media. We are extremely transparent. Heaven forbid we have an issue where one of our features is temporarily unavailable. Within 10 minutes we're posting. Being fully transparent, domestic payments are impacted, international payments are impacted, and we keep that post up until we're back up and running again. Most recently, with the support of Cedar, we went through a very significant core banking upgrade. We bombarded our customers with messages on a daily basis. This is coming, there will be downtime. We wanted to get their trust in advance, that they wouldn't be concerned, why is Illa having this outage for 8 hours? Why can I not access my funds? And even on the street walking around, people were fully available and aware of what was going on, so that trust wasn't breached as a result of that as well. So that's key from a trust perspective. When it comes to retention, number 2, this is where the name of the game really changes. And for me, the most important thing on retention is actually data. And I sound like a broken record to my team and others speaking about data, but if you want to retain a customer, you cannot be in a reactive mode of seeing issues and trying to fix them in advance. I live and die by the data that we have. Power BI reports, data analytics, all of these things. When I wake up in the morning as CEO of the bank, genuinely, I'm not overly proud to say this, but the first thing I'm looking at is my phone, these dashboards, these reports. How is it looking on onboarding? Are we seeing any patterns? How have our payments gone over the last 24 hours? Is there any failures? Is there any patterns I need to be aware of? And by having that data at my fingertips, and by my team having that data on our fingertips, we can see very, very clearly what is the experience of our customers without them having to call us and tell us about anything. And if we start to see a negative experience, we nip it in the bud immediately. Our call center will reach out to them, they'll proactively say, I see you had an issue. And again, that will allow us to retain these customers. When it comes to product offerings, we've just seen from Cian, we're working in a very competitive environment here in Bahrain. The opportunity is that a lot of people are using platforms, which is great, but you can't stay still. Illa went live with a very modest product offering 5 years ago, but we have to be in a position to release a mobile app every 2 to 3 weeks. in that app there has to be some value add to our customers to keep them on the hook, to keep them excited. It's no longer just onboarding and having a debit card. Customers here demand more. They demand different types of payments. They demand getting into all of these different types of government securities and others, and we're very happy to continue to build that with them. And last but not least, you mentioned acquisition. When you look at digital channels, this is a huge opportunity for us. If you said to me 10 years ago when I landed here in Bahrain that I would be using a digital channel like TikTok to get people to come onto our platform, I would have thought you were absolutely crazy. Yet here we are seeing all of these different social media platforms available to us where we can reach out to people, bring them onto the system, and more importantly, give them the messages if we ever have issues as well. So across all three, I think we're seeing a huge opportunity with this digital environment to embrace all of that.
Amazing. Well, congratulations again on what you have done there. It's amazing. And some of the points you talked about was, I think it's very important for all of us to take away from, right? I mean, the channels of acquiring customers are different. Retention is actually about being proactive and being, as you say, nip it in the bud even before it actually becomes an issue. And transparency is the name of the game when it comes to trust, right? And I love the way you articulated it. And I'm going to take this to you, Ashish. I mean, in what Cian talked about was essentially what it is from an individual or a consumer or retail banking standpoint, right? But what we're also seeing today, and since we're talking about the future of banking, you can see a huge amount of transformation happening out there on corporate and commercial banking, right? The ecosystem itself is undergoing a change, and you can see they are connected by the digital link across every single institution you're dealing with, be it an SME or a mid-sized player or a large corporate, right? So how do you, I mean, if you were seeing it and speaking as a banker, what do you see as the strategic outlook that any bank should actually take when it comes to corporate banking?
Thank you, Ram. First of all, I think thanks for having me here and really represent Standard Chartered and share a bit of our views. I think going back to your point, clearly not only the retail consumer space, but the digital innovation is having a profound impact on how corporates are strategically looking in terms of their outlook for corporate, commercial, and even investment banking. Not to undermine, I would say, the traditional relationship-based banking, but the focus we see continuously, the focus is also pivoting, shifting towards technology, data, efficiency, and all of that obviously is leading to a much more better, but clearly also a much more integrated client experience. Right? That's very important for an international organization like ours. Now, obviously, clearly, a lot has happened, but we still feel that it's an infancy stage. And we see this impact perhaps in some of the areas much more meaningful at this point in time, and at least in the foreseeable future. So if I was to look at, for example, even from a corporate landscape, the operational efficiency, right? Whether it's the account onboarding, increasingly for an international organization like ourselves, our clients have cross-border needs. They're extremely service sensitive. And in terms of their onboarding requirements, they want it to be done within no time. And we are seeing a marked reduction in terms of the turnaround. The processing time for transactions as well, right? Given a digital platform that we have also, and also happy to see some of our competitors also really, coming up with a lot of different ideas, which is also actually sort of keeping us on the edge. Clients are pretty much able to transact, do everything almost when it comes to the basic commercial corporate banking, whether it's through cash initiation, trade, cross-border, FX transactions on our platform. And the servicing of it also is pretty much self-driven, chatbots, and that has also led to a marked reduction in our client complaints, and also even if there are service issues, then significantly reduced turnaround time. I think there are stats out in the market where generally we've seen close to almost 50% reduction in the processing time for transactions, and that's huge for corporate clients. We are also seeing from a corporate bank landscape perspective, our core systems also getting migrated to the cloud, right? When you look at the global banks, I think the view is close to 80-85% again by this year or next year, the migration would have taken place, right? So that's the operational efficiency side of it. I think the other key important thing, and which probably is more closer to my heart, is client solutioning, right? That's where we are also seeing, which honestly speaking, someone like me even didn't think of it a few years ago only. And now with every passing day and every passing week, you're seeing that sort of positive impact coming through. So the model was always, again, relationship, product driven, and it's fast changing to a much more client-centric solutioning kind of approach, which is again, based on data-based engagements with our clients. API integration, right? Structured supply chain programs where we are able to capture, I would say, a much wider ecosystem of the supply chain, our customers, either customers or even the suppliers. That's, I think, where we are seeing huge impact. Centralized liquidity kind of solutions, centralized treasury solutions, which is again very, very relevant for the client base that we have with cross-border needs. And obviously also things like the whole spectrum of digital assets as well, right? Which is also becoming increasingly an important, interesting requirement of our clients, corporate and institutional clients. So I think that's where we are seeing a lot of sort of the impact coming through of data, digital and innovations. Risk management and compliance, right? I think Chetan put it out there and he spoke about it. That's where also being from the business side, it's really helping us to drive a better outcome of our clients and reduce a little bit of friction, turnaround times, etc. Right? So all your advanced data tools, AI tools is really helping, I wouldn't say forcing the banks, but helping the banks in terms of how they assess and manage the risk as well. I think all your real-time fraud detection systems, which are equally relevant, by the way, for corporate banks like a retail bank, are really helping when it comes to the digital innovation. And then I would say the last piece, the competitive landscape and the partnerships. That also, one of the days when we looked at the FinTechs as a competitor, I think we're using increasingly them as a partners. We're using or we looking at them as an opportunity in terms of making them our clients. And there are a lot of examples within our landscape as well, right? We have what we call as SC Venture, which is basically an extended independent arm of Standard Chartered Bank globally. And we have about 12, 13 ventures. And some of their ventures obviously are the likes of digital banks in a bigger market like Hong Kong, Singapore, etc. But they also have certain sort of ventures which they have been able to integrate with some of the large commercial banks, even in our part of the world as well. And that's where we see the value in terms of the partnerships. So I think all of these areas where we see profound sort of an impact, but ultimately at the end of the day, when we look at all of this and measure ourselves, is it really helping a better outcome for the clients? Second, a better return for the shareholders. And that's the journey we are seeing in a much more positive.
Fascinating, Ashish. So, firstly, you said you're moving away or moving from a relationship-based, banking into more a solution-based banking. So we're moving more towards, creating what that value for the client is, be it in terms of efficiency, and you talk about 50% reduction in the operating, efficiency levels, which is a huge number. We're talking about a very important point that you touched is about how you are seeing fintechs as partners and how that is actually helping build through the value chain, or be it in terms of suppliers or customers and across various categories of products you offer. And that's something that I'm going to take to you, Tariq, right? Ashish very nicely talked about, and he talked about more from a corporate banking standpoint, but you see this across all the banking areas, right? Where we've moved away, or let's say we've graduated or matured from actually having fintechs to be seen as competitors to actually being seen more as partners in the financial services fraternity, right? So you see increasingly the presentation that Cedar made earlier, we saw that Bahrain can boast to have one of the highest number of APIs in this region, which clearly talks about what fintechs have to offer when it comes to financial inclusion, when it comes to expanding the base in the country, right? What do you see as the next wave from here? I mean, where from here, where do you see things unfolding as in the future?
Yeah, no, thank you for having me, and great thoughts and comments. I'll take a step back a second, and as he says, building a future-ready bank. Now, Bahrain FinTech Bay, we are, in very simple terms, the ecosystem builder. And the reason why I mentioned that is because building requires a foundation. I think Bahrain, we're very lucky in the sense that if you have the history and maturity of the banks that have already been here for a very long time, so there's a foundation in place. Now, how do we move forward? We move forward with the word collaboration. And fintechs, as you rightly mentioned, are no longer a disruptor. They're an enabler for all the banks. So at Bahrain FinTech Bay, we really try to ensure that the environment is in place for the collaboration to take place between the fintechs and the banks moving forward. So there's one thing to start with, was mentioned on the slides. I think the cultural change within the banks is great for people like us to see, and we work very closely with the banks on these things. The risk appetite's increased a bit, and then being exposed to fintechs over the years, it was, oh, these guys are disrupting us, they're disrupting us. But when they sat in rooms and worked on solutions and had kind of the same goal, they realized, okay, maybe we need to be a bit more agile. The fintechs themselves collaborating with the banks thought they could go it alone, but in reality, the scale and trust of the banks was still very important. So the environment of Bahrain, fintechs working with banks, makes it a great environment. And not to mention, I think we're lucky, and we need to understand, we have a regulatory sandbox, we're all aware of that, but Bahrain as a country now is being seen as a sandbox in its entirety. And I think some of the banks are starting to see this. We're seeing live examples. And of course, these are driven by real-world impacts and real outcomes. So I know a few things were mentioned in AI. I think AI already, I know for the future-ready bank, I hope today's business operating model of the banks have AI infused in their business operating model already. I think the next phase now is going to be how we ensure the ethics of AI, that's one side, but how we work with fintechs on ensuring whether it's what the customers want, they want instant cross-border settlements, that's maybe, I'll give you, that's an example, right? So that's your institutional customers. Banks in Bahrain have licenses in other jurisdictions, so how do we use Bahrain as a sandbox to build with those fintechs tangible solutions, and also think about taking it out. So I think in the last year we've seen, we've had FinTech Forward, our flagship event, but that brought to light some tangible examples of how banks and fintechs are collaborating together to solve, say, real use cases. And use cases are very important here. To bring fintechs in as an ecosystem builder, we need the banks to have an appetite to innovate. They might not necessarily implement these fintechs and roll things out, but it will just, I don't use the word disrupt, that was the 90s, but it will allow the COOs or the C-suite to see where they stand and have a heat map in terms of the tolerance level for the risk appetite of those new products. You mentioned just assets.
that's already happening. We're already looking at customers wanting exposure and access to new digital cryptocurrencies and all that sort of stuff. We're seeing protocols already written and developed for agentic AI agents. That's going to require a new rail. So what if suddenly people on e-commerce sites wanted to pay with their AI agents? That's not something in the future, that's something already written and developed. People are now figuring out how to add these to the rails. So I think that's where I'm being a bit extreme here, but that's actually what's happening today. So a future-ready bank will need to kind of think about how those fintechs are building and working with them for those sort of things. And we're lucky we have Bahrain as the regulation supports us to experiment in those areas. So yeah, I think that's.
Thank you.
Just wanted to throw a grenade.
Interesting, Tariq. I mean, you made some bold statements, should I say? But I actually want to take away something that you said before I took it to you there, Saqib. Tariq's comment was that if one was to actually see the impact of what digital is making to the industry, subconsciously the area that he picked was payments, right? I mean, whether it is crypto or agentic AI, but the reality is the proof of pudding for the average man on the street, or the person experiencing what happens from a digital standpoint is how easy it is when it comes to digital payments, right? And clearly the element of trust and comfort along with the payment experience becomes a critical factor. We've seen that happen in the last few years. A lot of movements, a lot of significant impact on that. What would you forecast as the next big shift? He already talked about cryptos and agentic AI, but I don't want to steal his thunder. What would yours be?
Well, thank you so much. It is indeed a pleasure to be here today. Being in Bahrain is always a pleasure for me. Coming in after almost 6 months, but it's always nice to meet friends. I think my fellow panelists have already covered a lot of the stuff that I had planned to talk about. But to be very specific to your question, I think the future is going to go and driven through different AI applications. Agentic commerce is something which is going to pick up really big. Tariq was talking about the experience of buying things where you literally don't have to do anything. It is all done by smart AI bots that are working on your behalf. I was at a visa conference a couple of days back, and they were showing an experience of somebody who wanted to buy a gift for his wife, and all he said was he picked up the phone and he said, my wife's birthday is coming on this day. Can you please buy something for her? And it all just happened instantly. It was a nice sort of a ring that was bought on behalf of the gentleman by a very smart AI robot. And that AI robot really knew what are the likes of his wife, what are the dislikes of his wife, etc. End to end. I mean, just imagine, this is not even future, this is happening right now as we speak. So I think, to be a bit more specific to your question, banking will be invisible. I think smart banks that are building futuristic banking platforms and building on their transformation journeys, they need to look at banking from an invisible standpoint, meaning that a lot of embedded finance will be taking place, which is already taking place, right? Banking as a service will be a big thing, which is already happening in Bahrain because of the API's availability on the sandbox. So invisible banking is something which is really big. Non-banking players will be effectively embedding banking products within their journeys and applications and front ends, whereby the buyer or the consumer wouldn't even know which bank is working behind the scenes. And that's where partnerships is very important. I think that's where the thought of looking at a FinTech not as a competitor but as an enabler that will grow the bank's books has to be implemented. The use cases around accounts being offered to FinTechs or BIN sponsorships being offered, I think that is very key. From our perspective as I2C, where I think we can really enable this dream to be implemented really fast is on our high availability of services. And that's what we do with around the world with the 25 years of experience in the space of payments and cards and banking. This is something that we do as bread and that's our bread and butter. So I hope that answers the question.
Thank you. I think the one thing that most men in the room are going to be very happy about is your idea of remembering a wife's birthday and getting them a gift. So if not anything else, I think that's a very important takeaway. But
I have a question. Did he tell us that he told his wife? How did he buy the? They didn't share that.
All right. But it's interesting that you talk about invisible banking, Saqib. The future of banking is about not invincibility, but about invisibility. Is the takeaway that I have from what you just explained. Look, I think we all have our own views on what the changes that is happening is bringing to us and what makes that change, right? I'm going to quickly open up to the audience for their questions, and before I did that, I actually had one question, and actually the same question to all of you, right? Now, we all have a view on what banking in the region, or more specifically in Bahrain, is likely to be in the next 3 to 5 years, right? And there is a perspective on where things are moving. If I have to ask you, you have to make one strategic priority that one has to pick. Obviously, the answer is not one; it could be more than one. But if you had to pick the topmost priority, it could be, could be ecosystem collaboration, could be technology, could be investing in talent. I mean, it could be anything that you think would be most critical. And if I was to start with you there, Tariq, and then I go one by one. So what would be your priority?
I'll go back to my word collaboration, but collaborate on building the new infrastructure. So, for example, Bahrain FinTech, they were owned by Benefit. They're a perfect example of a starting point for what could be the new payment rails of the future.
So collaboration is the biggest priority that you see
on future infrastructure.
On future infrastructure. Thank you. Ashish?
Look, I think there are quite a few, can't be one. Right, we are at the end of the day in the business. But look, if I was to look at sort of the Bahrain's economic vision of 2030 and link it up with the financial sector, clearly, the kingdom has outlined that vision in terms of leveraging the digital innovation to further strengthen their position in the financial sector, and which now, by the way, is the single largest component of the GDP of the country. So not only you have to defend, but you continue have to keep going, as the comparative landscape is also immense. I would pick perhaps digital assets and tokenization. I think that's where we as an institution see a huge amount of opportunity, and clearly that requires prioritization. With all these financial institutions which exist in the country, the sovereign wealth funds, the asset managers, and most of them, all of them are our clients, and their needs are also pivoting, their interest is also pivoting towards that. I think that's very important, and again, as a country, so clearly digital is the first principle. The leadership has created and facilitated that sort of ecosystem, digital infrastructure. We talked about the benefit, the e-key 2.0s, etc., e-KYC systems. Central bank, I think, has been really at the forefront of providing what I would say is a regulatory leadership, right? They have been the first one. And again, Chetan referred to some of those. We are the first country with stablecoin regulations and modules, the open bankings, and more importantly, they are by DNA as a regulator very consultative, right? And that really helps them to leverage on some of our global knowledge expertise, and as well as it's a two-way thing. So And as an institution, we are well placed, but there is a lot to do. Just for the benefit of everyone, we do have now capabilities built in to be able to offer, the entire spectrum of digital assets. So starting from custody, trading, as well, and we are offering this for the corporate and institution clients across few different locations. And that's through a corporate and investment banking arm of the bank, but also what I mentioned earlier, the SC ventures as well. So they have got some ventures like Zodia Markets, etc., which are primarily focused on the custody. And we already have, in fact, some of the large international banks signed up to be able to sort of use our venture and FinTech to be able to provide their service to some of their customers as well. So digital assets and tokenization. And I mentioned custody, trading, and tokenization is clearly a third integral part of it. And we see that landscape immensely evolving, right? You're not talking about a very simple financial asset. You're going and thinking is much more beyond and broader in terms of what you can tokenize. And that fits well into the strategic priorities of the country when you talk about Bahrain FinTech base, the central bank, EDBs, but equally and coincidentally for an international institution like us, we see this as a massive opportunity in terms of our clients' requirements and needs.
Very interesting. So, digital assets and tokenization, they go hand in hand. And clearly, that's again going back to the collaboration on future infrastructure in a way, right? I mean, that's a very insightful input there, Ashish. Thank you. Yeah?
Fully echo the sentiments of my fellow panelists as well. I think just pivoting into another area where we have a huge opportunity is next level AI adoption. And when we talk about AI adoption, I'm not talking about a check-the-box exercise where we can all say we've done a little bit of AI by utilizing a chatbot or utilizing integration with Copilot or things like this. Bringing it to the next level in a meaningful and responsible way. Shaping that responsibility. We've got great support from the local regulator here in Bahrain. We're very blessed to have that. But helping shape how we can do that together, collaboratively, as you mentioned, in a responsible fashion. For me personally, looking at the opportunities with generative AI, embracing that, bringing it into the teams, bringing it into your coding practices and your development practices, looking at how you can actually increase operational resiliency as well, whether it's getting AI involved in some of your decision making when it comes to fraud monitoring and alerts, operations, or generally in IT, but again, all in a responsible way. I think we've all dipped our toes in AI and we're very fortunate to do that, but all of us here in Bahrain have an opportunity to really champion this now, grab the bull by the horns and be seen regionally as the leaders in pushing this through.
Next level AI adoption. I guess it's a statement that I don't think anyone here could actually refute. Resonates with everyone there. What about you, sir?
So I think from Bahrain's perspective, it is already in the forefront when it comes to being openness and having frameworks which are reinforced by the central bank and the likes of these regulatory organizations here. What's most important is to continue having this this mindset and this view. So I think to the point of Tariq, collaboration is certainly the key. I think Bahrain has always believed in collaborations and bringing in that mindset and implementing it with those collaborative views is super important. In my view, from a payment standpoint, I think there is certainly a lot of focus will get into agentic commerce, which also refers to my earlier point, which is invisible banking. People are buying things or buying banking products, but they don't know what's happening behind the scenes. So it's really going to blur your lifestyle, and banking will be so much embedded in different ways that you really don't know that you're doing a transaction with the banking entity. That's my view.
Agentic commerce. So, I'm just summarizing these very insightful takeaways on what the eminent panelists here view as the priorities that we should be looking at for the future. We're talking about collaboration on future infra, we're talking about digital assets and tokenization, we're talking about next level AI adoption, and we're talking about agentic commerce. Very fascinating thoughts there, gentlemen. Thank you. I'll open it up for questions from the audience. I see a few hands go up, so if you can someone give the mic to Samar, please? Samar, if I can request you to introduce yourself before you ask the question.
Good morning, everyone. Sam Al-Merari back from Jordan. And I flew over from Jordan to be with you. It's a great pleasure, great opportunity. Great experiences. Some of you I came across back in the day, Ashish in specific. So my question is, almost all banks, they race to digitalize. Many of them started, unfortunately, they end up with fragmented tools rather than integrated intelligence. So the question is the gentleman's view on what could be a value creation journey driven by data, predictive insights, whereby we achieve the customer outcome from one side, the return to the bank from another side, as opposed to a tech showcase, which we see these days in many other banks. Thank you.
Yeah, you want to take that?
Absolutely. Look, I think first and foremost, the statement you made at the start, I can completely relate to about fragmented ecosystems. It's something we struggled with in the early days as well, where we just brought in a flurry of different tools, different insights, and some of them couldn't scale to our demands. So rationalizing those over the last years was an expensive exercise, but it's one that it's better just to hit the nail on the head and get it out of the way. When it comes to data, and this is something I touched upon a little bit earlier, for us we had to do a huge investment in looking at how can we have the appropriate data lakes to make data-driven decisions. So when you look at something like where you want to go next with a product offering, or even how things are going at the moment, if you don't invest up front in having the ecosystem for this big data or for these Power BI reports and others, you really are flying blindly. So we made a conscious effort about 4 years ago to actually scrap a lot of the initial work that was done where data was being recorded, take a step back and just rebuild that. And again, that involved us going out to get external help. It wasn't always the case that we could do that internally to be able to have that data at our fingertips. The technology ecosystem has to be supported as well by the governance internally as well. So for us it was around building segregated reports so that whether you're in business, whether you're in IT, whether you're supporting at the contact center, every decision made is data driven and pushing back to that as well. You touched upon a couple of others. I think it's interesting coming from Jordan. The bank is also live there as well currently, and I'm really happy to hear that. I'll have to sit with you after to get some feedback if you don't mind. That would really be great. But when it even comes to different jurisdictions on the data, you will find that certain tooling can't just be used across both areas. When it comes to, for example, maintaining records of Jordan CPRs and others, the tooling that we use in Bahrain cannot necessarily be the same tool sets that you have locally in Jordan as well. So we did need to invest when it came to data on having dual setups, but feeding into the one line of reporting as well. Does that make sense at a high level? I'd love to sit with you after to go into a bit more detail if you're available, particularly on your experience on ILA locally. Thank you. Thank you very much.
Thank you. Yeah, I see the hand there. If you can introduce yourself, please.
Sure. Good morning, everyone. I'm Haytham Hisham bin Laba from Arab Financial Services, AFS. So, sister company with ILA Bank. So definitely we're working hand in hand in order to enhance the financial inclusion ecosystem here in Bahrain. I'm definitely fond with all the work and what the panel has achieved in regards to contributing to the enhancement of the payment ecosystem and the banking services here in Bahrain. My question is that how can fintech innovation be leveraged by banks to transform, let's say, global transaction banking and other corporate payment services into more seamless, real-time, and client-centric ecosystem? Thank you.
Thank you. Ashish, can you take that?
I'll just start with just a use case that came out 2 weeks ago, right? And goes back to my point of Bahrain as a pilot ground, right? So we met Google in Zurich, Switzerland on the 5th of June, and they were showcasing their distributed ledger technology for payments, the Google Cloud Universal Ledger. Now, it's not going to revolutionize things overnight. There's ROI for banks to take on these sort of things and change and have massive impact on their internal operations. But the Google Cloud Universal Ledger or any distributed ledger technology allows for instant settlements. So instant settlements is what customers want. What was funny when we spoke to clients of the banks that we did the pilot with, people in the room, the banks were sitting there saying, oh my God, this means we need to open on a weekend. And they started thinking about all the operational elements and all the changes to all the documentation, policy, procedures, systems, all that stuff. But at the end of the day, the customer's seen the value of it, and just like you said, cross-border settlements, instant settlements, all these sort of things are coming, and if you don't change or you don't adapt, you need to service them. So we did that with the help of Google, but only to articulate the point that it is possible, it can be done, and it's quite easy to do from an environment like Bahrain as a starting point. And the banks we worked with, they have jurisdictions in other geographies. So suddenly it becomes a domino effect of the client's clients want an instant settlements. And then internal settlements between clients. So it was all driven by the customers, and we were just sitting in the room and the banks started looking at themselves and saying, okay, maybe Google's not the answer, but distributed ledger technology for instant settlements could be the answer. So that's just a starting point for what maybe some of you guys
No, Tariq has already answered. This is exactly the solution. I think, again, from a local landscape perspective, the country is eager. We have seen it now that getting adopted in the domestic payments, where you can do 24/7 on the weekends, etc. But I think the old-fashioned traditional infrastructure of what is called SWIFT system, that needs to really get reshaped. SWIFT, absolutely, and very promptly. Because this is the need of our clients. And again, I go back to my point around most of our clients' needs are cross-border, and nobody now has the patience to pay up whatever $15, $20 that it costs you. And second, also after 2 days, 3 days, even after a weekend, literally have no visibility and chasing people here and there. So, an advanced level of distributed ledger, I think, is the way to go. This, in some cases, is being piloted somewhere, again, through the collaboration. We as a bank also are looking at adopting in terms of how we can electronically make the trade finance transaction much more seamless. And that also has an impact, positive impact in terms of any fraud risk. So electronic bill of ladings, electronic bill of exchange, the ability of the banks to be able to partially discount our customers as well and endorse those bill of exchange, that will not only make the cost of those cross-border transactions going down, improve the seamlessness and the client experience. But third most important aspect that we foresee that will eventually help the financial institution to increase what we call as financial inclusiveness. So being able to basically bank the supplier of your customer, not only at this stage, we just stuck at that, but all the way going down to the value chain. Right, that's very important. So very important, relevant point, but I guess a lot of work to be done.
Thank you. I have time for one last question, if there is a person there. If you can introduce yourself, please.
Hi, this is Shaima from Bank ABC.
From Bank ABC.
Yes. So my question is, we are in a market where opening an account is as simple as downloading an app. How can we keep the customer loyal to this bank? That's my question.
I think we had someone explain about customer retention earlier, but it's more than
Absolutely.
that.
I think it's a very good question. I think for us, like you mentioned, you can open an account now in 3 minutes. Anyone can open these accounts, and it's really about getting the hook where people will not just be hopping around and be moving between the banks. What we really had to do in it, and I'm sure all of us can relate to this, is number one, you have to have the limited product offering that's used on a daily basis needs to be reliable. We all know how embarrassing it is if you're in a restaurant or somewhere you're using your card and it's failing, there's people around you. You only get a couple of shots where if this fails, people will leave. If you have stickiness in your product offering, that will certainly help. People won't just be able to abandon you and go to another bank very quickly, whether that's through personal loans or other products. But for us, it's really around, and particularly in ILA, to keep that loyalty there, people need to feel that they're looked after. If they have an issue, that they're not speaking to an IVR robot, they're speaking to a real person that can solve their problem quickly. They need to feel a sense of urgency when there is an issue, that it's turned around quickly. And really, from our perspective at ILA, they need to feel a sense that new products are continuing to come. It's not just that staleness where people will jump between one bank or the other. If they feel that the journey is exciting, even if they know that the product offering was limited at the start, they become ambassadors for us. They start to work with us and you build that brand loyalty with them. But that will all disappear if the product isn't reliable. So it's really around just making sure we're monitoring what people are doing. We have visibility. Like I mentioned earlier, we're not reactive. You're not calling us to tell us an issue. We know in advance and hopefully we're reaching out to you, and that we build that loyalty together.
It's interesting that we actually have visibility and invisibility go hand in hand in this conversation. Well, gentlemen, I will have to draw the curtains on this, very, very insightful discussion. So, can I request you to now put your hands together to thank this panel for a wonderful